Good day, management, investor, and all participants online. I would like to welcome you all to Thai Union Group Year 2018 Result Announcement. Today, the executives who are joining us today include Mr. York Irie, the Thai Union Group CFO.
Hi, good morning, good evening here in Asia, and good day in Europe.
And Mr. Ludovic Garnier, the Head of Group Accounting and Controlling.
Good evening, everyone.
And myself, Bess Vayanon, Investor Relations Manager. This event will comprise approximately 30-35 minutes of presentation session, and toward the end of this session, we will provide the time for the Q&A session for about half an hour. So please do not hesitate to shoot us any question that you may have, and we will try to respond to them accordingly. For any participant who has any inquiry to our management, please feel free to type in the question, and we'll answer them as they come in. And without further ado, I would like to open the floor and pass the stage to Mr. York Irie to start the presentation. Thank you.
Okay, thank you very much, Kun Best. Welcome everybody to our Q4 earnings release 2018. It's already the first couple of weeks in the year, so it feels a bit odd to talk still about 2018. But today I'm really happy to present to you what we regard at Thai Union to be a great continuation of our operating recovery. As you recall, we had already a substantially improved Q3, and with a Q4 that shows a 55% operating profit increase. And that also records the highest level of revenue we reported in any quarter before. I feel quite happy, and I'm sure I share this with a colleague in our leadership team. Very happy to present a good Q4, very solid net income performance, a fantastic recovery on operating profit. Gross profit improvement of 11.4% compared to prior year. A growth compared to Q3 of 5.4%. Year-over-year growth of 3.7%. Really satisfied with Q4 performance. On top of that, and you will see this a little bit later, we have continued our very strong cash flow performance that we had shown during the course of this year, and we'll end up with a cash conversion rate, operational cash conversion rate of 0.9, which means we are returning 90% of every EBIT dollar that we have earned back to our banks and reduced our debt exposure. So revenue in Q4, 36 billion. Pretty stable FX environment. Sales growth is driven by our frozen business and our pet care business. The ambient revenue saw small revenue declines, primarily from euro depreciation. We are ending with 14.9% gross profit in Q4 2018. That's up from 13.8% a year before. So we've gained 100 basis points of gross margin in the course of this year. Stable raw material price environment, continued focus on price recovery, stability of prices are helping here. Strong frozen and pet care business that helped drive this recovery. I think we had, and a couple of questions, we'll focus on that later on. We had one or two special events in Q4 that we did not report as adjustments or normalizations. We had some inventory topics, and we'll share that a bit later with you. Without those issues, we would have exceeded 15% of gross margin very clearly. So 14.9% gross profit, great performance. We're really happy to have continued our recovery in Q4 during this second half. 55% year-over-year operating profit improvement to 1.5 billion. That is a really good result for a fourth quarter that is typically a little bit softer, especially from the European branded business. We have a 10.7% SG&A ratio. It's a little bit higher than we'd wanted. I would have really wished to push this below 10.5, but typically some year-end cleaning exercises in some operating companies, so we couldn't get to below 10.5. But with 10.7, we again lower than the year before that showed 11% in SG&A. Net income 1.2 billion. We had some one-off effects, and we'll talk about that a little bit later. Solid operating environment, but below operating profit, we lost a bit steam on FX compared to a year ago. We had some one-time expenses with the closure of our ESCO plant. I had alluded to everyone that this is going to be in the very small single $1 million range. I think it was 67 million baht, so that's exactly $2 million. And we had an impairment of a shrimp hatchery activity in Songkhla, in the south of Thailand, and we recorded this as an adjustment to our balance sheet. So 1.223 billion net income for Q4, which we feel is a good show of the continued second half year recovery. On the next page, let's just quickly look at the 2018 full year numbers. Net profit, please bear with me, we have to always remember Q1 2018 was really a very, very difficult quarter for us, with basically an operating break even. So we still end the year with 5.2 billion net income. That's 13.4% down year over year, but in the second half we are up. We have been able to reduce our net debt to equity from 1.38x to 1.35x, and again, if we eliminate here the chicken of the sea antitrust settlement accruals that were made, we would have even been able to reduce this to 1.29x. So you can see operationally, with strong cash flow performance in this year, we have helped the deleveraging of the company into the closer to the range where we want it to be. As you recall, we want to get back to a 1 to 1.1 times net debt to equity ratio. So I think we've done really great progress in 2018 in this regard. If we move to the next page, as you remember, we always show you a little bit of a long-term trend for the company. And as you can see, we had a huge dip in Q1 2018. Q2 18 was not fantastic either, but then with the third quarter, we again come back to sequential improvement over the prior year's quarter. Same in Q4. I think the only sign here where we are in Q4 negative is the net income, and this is where we simply see some more normalized below operating profit performance items. We will comment on that a little bit later. Just some recent highlights in the business. Sustainability continues to be our real rock and roll topic here. The European Union lifted Thailand's yellow card on the IUU, illegal, unreported, unregulated fishing for the Thai industry. That's an amazing step forward. There has been, and we have here put a little bit of a timeline in place. The Thai government, the Thai industry has responded to the yellow card that was issued in 2015. Thailand was seen as non-cooperative, as a problematic country, as being infected with many problems in the industry. And I think Thai Union has focused really a lot on this topic. We have spearheaded a lot of improvements, worked with the government, worked with our peers in the industry to resolve this issue, bring Thailand and help Thailand to come back on a positive trend. And we see since 1 or 2 years that the EU and the Thai regulators are really working well together. There's a much better communication and people are quite appreciative of what has been achieved. The move to be on the yellow, to be no longer a yellow card holder, but to have moved to a full green card is an encouragement to continue on the path of continuous sustainability, to strengthen the human rights, not only in our home country, but also in every country we operate, and to be really continuously at the forefront of sustainability, of human rights, and of protecting our environment. Next page, Global Compact Network, Thailand. Okay, it takes a little while. We have signed an agreement with the Monterey Bay Aquarium, with the Carnegie Endowment. We have started the Sea Change Ignite program for our frozen business. We have expanded our sustainability commitments in the aquaculture environment, and we see there's a lot of traction, there's a lot of good collaboration between Thai Union, NGOs, institutions like the Monterey Bay Aquarium, and a lot of good effort to move forward here on this extremely important topic. Innovation, another one of our key pillars. In February 2019, we have partnered with the National Innovation Agency, NIA of Thailand, and Mahidol's University Science Faculty to launch a food tech startup incubator. It's called Space F. It is fully aligned to Thailand's focus to innovate the food space, and we have built here a platform as a food space incubator to invite young entrepreneurs, offer them help, offer them assistance in their startup activities, and we will also be available for future funding for great and innovative ideas. I don't want to go through all the individual topics. We are highly commended for recruiting migrant rights judges, for the Slavery Award from the Thomson Reuters Foundation. We work with the World Wildlife Fund. So a lot of good recognition on innovation, on sustainability, two of our very key pillars in our operation. Overseas expansion. example, China, we have opened together with Red Lobster the first Red Lobster in China in the IFC Mall in Shanghai. We have partnered with a Chinese Hong Kong operator called FWM. FWM is operating Morton Steakhouse in China and in Asia. It's an upscale brand image. It's much more modernized, and it attracts a very nice crowd. We have great feedback from consumers. We are beating our own business plan at the moment with this restaurant at the IFC. And all of you who visit Shanghai, please be welcomed to the first Red Lobster in Shanghai's IFC Mall. Other developments, we were honored by a visit of the delegation of the Seychelles government. The president of Seychelles, Denis Faure, was at our operations on the Seychelles, and we have worked with the International Transport Workers Federation. We co-hosted training for fishermen in Chumpon. So a lot of good traction here on our business and our operations as well. Let's move back to a little bit of financial topics, more interested for investors. We are committed and continue to be committed on our excess of 50% net income dividend payout. We have decided today in today's board meeting to adopt the 58.8% dividend payout ratio. That brings us on our reported net income to a dividend of 40 satang. As you are aware, we have accrued for $42.6 million settlement, potential settlement risks for the antitrust liabilities we have in the United States. This, of course, goes into our reported net income, and as our bond covenants restrict us on 60% or to stay below 60% dividend payment on our reported net income, this was the maximum we could do. Would have loved to do more. We believe in the strong earnings power of the company. We have a strong cash flow, but this is a way how we try to give back to shareholders. But still, we all are in the same boat of this antitrust, and I'm sure we will get through this as well. Let me just focus a little bit on some key takeaways for the Q4 results. Record quality top line. We talked about strong gross profit margin. We talked about 14.9% compared to 13.8% compared to last year. Very positive operating profit development, plus 55%. SG&A flat in absolute terms. So despite inflation, despite salary increases, we've been able to keep our SG&A flat. Less favorable non-operating items and impacts on the ESCO, as our Scottish business closure in Scotland. 69 million was recorded in Q4. I think we've stayed overall very well in the planned outlay for this restructuring. With this, the operations in ESCO is closed. If we go to the next page, our business in ESCO is closed. If you recall, we had substantial running losses of around $5 million every year in ESCO year over year. This business has been now discontinued, and even though it's of course really sad to have to displace employees and have to close an operation, I think it's good that we can move here into a healthier business environment. Last page before I move to Ludo, who will give us a little bit more flavor on each of the quarter's results. We see here on the next page our raw material price environment. If you recall, 2017, 2018 saw really high raw material price situation. In October 2017, prices exceeded $2,000 quite substantially. This has come down. We are now in January below $1,300 per ton. Skipjack tuna Bangkok landed. So this has normalized and has helped us to bring our margins into a more beneficial situation, and we'll comment a little bit later on our tuna performance. Maybe Ludo, you want to take over and lead us through our quarterly earnings.
Sure. Thanks a lot, Jörg. So talking about the top line, the sales, so we are very happy with Q4 18 quarterly sales, which are new record for Thai Union. Total sales is 36 billion baht, increasing by 3.7 versus last year and increasing by 5.4 versus Q3. And I will explain the main drivers just after. On the full year basis, we achieved 133 billion baht versus 135 last year, so decreasing by 1.2%. FX is playing a very big role on this one. USD has been depreciating again in 2018. So if you exclude these amounts, in 18 sales would have improved by 0.5% if you exclude the FX impact. Looking by segment, you can see that the main drivers for the quarter increase are coming from the shrimp, the frozen business, mainly shrimp and lobster, together with pet care. And pet care in Q4, pet care performance was really good and really strong in Q4. You can see also that the FX, and especially the euro, has played a very important role in Q4 and a very negative one. In Q1 and Q2, basically, we really suffered from the USD depreciation versus Thai baht. In Q4, USD was almost stable compared to last year. And in fact, it was the euro and also the GBP which were depreciating versus euro. Slide 22. So here we can notice one thing which is important is the increase of the domestic sales. And now you can see that over the full year 2018, domestic sales in Thailand represent 11%. 5 years back, it was only 7%. So the domestic market has been really increasing to the expense mainly of the US. Of course, FX is playing a very important role there. And the sales to the US now represent 38% versus 39%, quite stable compared to last year, but versus 44% 5 years back. In terms of sales breakdown, there is no big change compared to previous years. Private label now represents 55% of the sale and the branded business 35%. We don't have any big change on this one. So gross profit is a second big success of this quarter. So we achieved 14.9%, increasing by 11% versus Q4 17, slightly decreasing versus Q3. We don't have any issue with this one. You know that in Q4 we have a seasonality with lower sales coming from Europe. So it's very usual that we have a profitability in Q4, which is a bit lower compared to Q3. However, compared to Q4 17, we are very happy with the turnaround. The main driver for such recovery are coming once again from the frozen business, being the shrimp and the lobster, and the pet care also. We will comment this one a bit later. Wisconbest is also achieving a very strong performance in Q4. On the full year, we achieved 18.9 billion baht, decreasing by 2.2% versus last year. So we're not happy with this performance. This is mainly due to the Q1 performance, which was really low, historically low on this one. But if you look at the trend in Q4, in Q3 and in Q4, we really have a turnaround of the situation and we are back to growth on these two items. OP also on Q4 is the very good news of this quarter. SG&A are really under control, and we achieved 1.5 billion baht OP in Q4 versus 1 billion last year. So the growth by 55% is really a very good news for our business, and we are very happy and very proud about this one. Over the full year, once again, we are penalized by Q1, which was only at break-even, as Jörg mentioned just before. So we achieved 4.7 billion baht versus 4.9 billion baht in 2017. EBITDA Q4 18 is stable year on year. So we achieved 2.7 billion baht, quite stable compared to last year. The SG&A is one of the big drivers on this one, the OP also. Compared to last year, we are slightly decreasing by 5%, mainly coming from the OP drop. Net income is the only indicator, as Jörg said, which is declining versus last year, mainly coming from the decrease on all the non-operating items, namely the FX. We had in Q4 17 some very significant FX gain. In Q4 18, we still have some FX gain, however, much less significant. The other income were increased in 2017 with some one-off. If you remember, we communicated on this one. We don't have the same positive one-off happening in Q4 18. The share of profit is also dropping, mainly coming from our partner Avanti in India, whose performance in 2017 was really exceptional, and who is back to a more normal situation in 2018. On tax, the last item, we also had in Q4 17 some very significant positive one-off, mainly provided by the change in the tax rate in France and in the US. If you remember, we explained to you that last year, the decrease of the tax rate in France, we had some very significant tax liabilities in France because we have some significant trademark there. And these generated last year some tax credits, which did not happen this year. Over the full year, we achieved 5.2 billion baht versus 6 billion last year, decreasing by 13%. Once again, mostly coming from Q1 and Q2, and we are recovering in Q3 and in Q4. I will move directly to slide number 28. We don't have any other adjustments in Q4 18 than the TMAC and the ESCO one, which were already mentioned. The EPS is decreasing versus last year versus last quarter, versus Q4 last year by 13%, and decreasing by 29% versus Q3 18 on this one. On a full year basis, the EPS is declining by 13%. So this is just a consequence of the net profit decline. Slide 29, do you want me to comment this one, or do you want to take this one? The Red Lobster performance?
Yeah, look, Red Lobster, I can quickly comment on that. I think the first positive, clearly positive development is we see that the share of profit we have, even though it's here a loss due to the seasonal development. If you look at a share of loss of 317 a year ago and 200 in Q4, well, that's a substantial improvement in underlying profit of Red Lobster. We see an improvement in the off-premise business. We see an improvement in the restaurant performance, operating four walls performance, and we see moderation on SG&A and marketing expenses in Red Lobster. We've just been coming back 2 weeks ago from the board meeting in Red Lobster in Orlando, and we had very good discussions about next year's budget. There is a very clear and a very aggressive plan to return net income results back to us, to move the company into 140–150 million EBITDA range, and to be net income positive. So we're actually quite encouraged by the share of profit development. Other income as well, I think this is pretty stable. this is our dividend yield that we return from this business. Finance costs, same, pretty similar. Now, income tax, we had a little bit of a period mix-up here between primarily Q3 and Q4. If we eliminate that, then we see that actually in the course of the year we have the same income tax benefits from this investment that we used to have before. So if we normalize that, we see that our net income performance contribution for Red Lobster has actually improved compared to prior year. Also for the whole year performance for Red Lobster, the EPS accretion that we see, we continue to have quite a good net income, positive net income contribution for the whole year. More needs to be done to drive the share of profit to be really consistently positive. We need to have more focus on returning to growth in the United States. We need to have more focus on taking cost out of the system, being more affordable for our consumers, and we have a very strong operating plan to get Red Lobster into the framework of the acquisition case that we had at that time. Now, at this stage, it is still not the right time to make a decision on whether or not we will invest more into Red Lobster by the end of this year. But I can assure you, we do want to see clear positive net income contribution from the business before we make any decisions on further investments into the business. So we will be very prudent here and continue a well risk managed approach towards our engagement in Red Lobster.
Moving to cash flow, so this is another great achievement over the quarter and over the year. So we achieved in Q4 18 1.1 billion baht free cash flow. This is mainly coming from the improved profitability. The fact that in general the raw material prices are almost stable is also helping us, and we really did a lot of efforts in order to optimize the value in the inventory. So we have a drop by 4.8 billion baht, which is also one of the key driver of the cash flow performance this year. So we achieved in 2018 the record high free cash flow over the last 3 years by 8.4 billion baht, and we are very happy about this one. The CCR, the cash conversion rate, is also at record level, 0.95%. We achieved only 0.33 in 2017 and 0.67 in 2016. So we are very happy with this very strong free cash flow. And this also explains the bridge that you can find in slide 31 of the net debt. So we were starting from a situation of 66.4 billion baht net debt and a net debt to equity ratio of 1.38. And we moved to 33 billion baht net debt and a net debt to equity ratio of 1.35. And you will have here our usual key components, the EBITDA at 11 billion baht, the change of net working capital, which is mainly explained by the decrease of the inventories by 3.5 billion baht. Then we have the capex. We are still investing a lot. I remember you that we had our new factory in Germany, which was built during the year of 2018, which is one of the key component of this capex amount. And then of course we had the amount of dividend paid, 3.7 billion baht, which is still at very high level. So all of this, we told you that we want to have a net debt to equity ratio, which is around 1 to 1.1. So we are making some progress. Of course, it's not quick enough. We want to go quicker on this one, and there are some few initiatives on this one to see how we can get back to a more target level in 2019. Slide 32, very usual. We don't have any significant change here in terms of currency or in terms of maturity. Maturity, maybe one thing to say on this one. So you can see that there was a change in 2018. Basically, some part of our debt has become current on this one, and it also explains why for 2019 we need to refinance some part of this debt. I will go very quickly on 33. So ROE is 11.4%, ROCE at 7.7%. So these are the usual developments. Debt to EBITDA is still at 5.97 on this one, and net debt to equity at 1.75. We just indicate just below in dotted line 1.29 is the calculation if you exclude the impact of the chicken of the sea legal settlement, as we did since Q2 18. In terms of inventory days, we have quite a good performance, 115. We are quite happy with this one, and the net working capital at 100 days also is quite a good achievement on this one. So having said that, I will leave the floor to Kunbest to comment for the performance by business unit.
Thank you, Ludo. And for the key operating impact, we have started to see the more stable raw material price environment into year 2018, with the tuna price actually coming down to, during the fourth quarter, coming down to $1,400 per ton, which is down by 30% year on year and 4% QOQ. Why this may appear low? I mean, we believe that right now the tuna is at a more stabilized price level, and we have benefit in terms of our margin has recovered to a more normalized level. The shrimp price and salmon price are also relatively stable at a more manageable level, which help benefit our gross profit margin in our frozen and chilled seafood business in the fourth quarter. On the other hand, I mean, we have started to see during the fourth quarter that US dollars are now becoming more stable after the sharp depreciation in the early of the year. In the fourth quarter, the Thai baht against US dollar are closing at, on average, 32.81, which is relatively flat. Thai baht appreciate against US dollar by only 0.4% compared to last year. But the key culprit here is mainly on the Europe side, where we have seen the euro and GBP has depreciated against Thai baht by 3.5% compared to last year, which is the key reason for the weakness in terms of the sales contribution coming from the European continents. In terms of breakdown, ambient seafood, frozen chilled seafood, and pet care. Let's start from the ambient seafood first. Ambient seafood, we have seen the fourth quarter ambient seafood sales decline by 1.5%. This is mainly attributable to the weak euro and reduction of the lower margin bulk sale. So as a result, despite the fact that we see the sales decline by 1.5%, we have seen the gross profit margin up by 21 basis points year on year. That is mostly due to the stable tuna price material and the lower margin in terms of co-pack sales. We have been reducing that as well. So as a result, the ambient business gross margin has actually improved to about 2.5 billion during the fourth quarter. In overall, I mean, year 2018 ambient sales was 62.3 billion, which is similar level compared to last year. Okay. And for the frozen and chilled seafood business, we have seen the sales during the fourth quarter are start to picking up by 4%, 4.6% compared to last year. This has been driven mostly by the quantity sales growth. As we have seen, the quantity sales is up by 8% compared to last year. Moreover, we have seen the gross profit margin improve by 39 basis points. Now it stands at 10% compared to last year as well. This is mostly due to our focus on value added. Moreover, we start to see the lobster business starting to turn around and become profitable business for 3 consecutive quarters. This is mostly due to the strong volume growth as well. As for year 2018, the frozen and chilled seafood business are actually declined by 3%. Mostly are actually driven by the sharp drop in shrimp price along the year. And actually the volume are continuing to grow by 2% compared to last year. This is on the full year basis. On pet care business, we have started to see a very solid demand coming into the fourth quarter with pet care and value-added sales increased by 18% compared to last year. This is mostly driven by the quantity sales growth and some part of price adjustment. We have seen pet food business deliver a solid sales growth driven by increased sales volume after the relatively soft demand over the few previous quarter. And we have also seen the same similar strong sales growth in the value-added product segment as well. And of course, I mean, with the increase in sales volume come a better utilization, and as a result, the gross margin has improved due to the strong capacity utilization and better economy of scale during the quarter. In terms of the geographical sales breakdown, I mean, we have seen that the US and Canada sales are actually still growing despite the weak, let's say, relatively US dollars depreciation against Thai baht, with the fourth quarter sales growth in North America increased by almost 11%, with the US frozen business delivering a very solid growth. And in year 2018, North America, including US and Canada, are seeing the sales down by 4.2%. This is mainly from the currency impact.
So maybe on Europe, we have a special guest here today. We've brought Kun Stefan Reh, our CFO of our European business. And maybe Stefan, just impromptu, just jump in and share with the audience a little bit about the European business. There's been strong growth in Europe at the end of at the close of this year, in branded, also in private label. Maybe you want to share a little bit with the audience how you feel, how the business is doing in Europe, and maybe some ideas on where we're headed.
Sure, thank you. Thank you very much, Jörg. And very happy to be with you at this investors conference. So Europe, as you can see on the chart, is quite a complex setup of different businesses, different countries, complexity in the overall dimension of Europe, just like the continent actually is. We have a very strong brand in Europe, very strong brand in France, John West in the UK and North Europe, with market share which are well above 30%. Parmentier as well in France on sardines. Mare Bleu in Italy, which is a very exciting business, still relatively low in market share with about 7-8%. And then our premium brand King Oscar, great business as well we have in Germany, since we took a majority share into that business. Look, overall, Europe has been hit pretty much like other businesses by the inflation on tuna and on other fishes, which has led us to push on a lot of price increases in the market to obviously manage our gross profit margin in the best possible way. As you pass on price increase to the customers, that leads also to a certain extent to the consumer, and then volumes get generally affected in the overall protection measures, which is something that happened as well in Europe. Overall, I think we can be very proud as we maintain a pretty high level of sales. It's close to 1 billion, as you always mention in other calls. But we suffered a little bit in volumes. Heading into 2019, we see, as shown before, a lesser intensity on tuna prices, which should really help us recuperate the margins that has been potentially missing from our historical baseline in Europe. So we have a very high anticipation. Europe for the group is very important. We generally deliver gross profit margin above 20%, which is very accretive for the group, and operating profit as well in the high of the 10%, but also an SG&A that is above the group average, around 13%, which is also significantly higher, but translating as well the investment we do behind our brands. And myself, I'm pretty confident into 2019, after 2018, which has not been up to potentially the standards. So I would really look at a much higher profitability going in the future. Sales within 2 to 5% organic growth, which is generally what we do, and I think this is basically my headlines for Europe.
Great, thank you. Thanks, Stefan. Maybe one of the next quarterly conference calls, we bring you over and you can share a bit more about some of the great brands we have, about the great products of Patina Via or in John West, or the excellent sardines of King Oscar, and share a little bit about what do they do well, and how can they maintain the fantastic market shares and consumer preference that we attract. Always good to have the real operational executives here and share with our analysts.
Okay. And for next market, we focus back to our home country, Thailand, which is a star performer during the fourth quarter of year 2018, with the sales actually up by 27%. This is actually as a result from the diversified into the home market to offset the weaker export market out there as well due to the baht appreciation against other currency. We also see the strong export sale from ambient seafood and pet care business coming into the fourth quarter. So as a result, in year 2018, in the full year context, Thailand sales, domestic sales been growing at almost 15%, which resulting at a greater contribution from Thailand. For the emerging market and for the rest of the world, we have seen a decline by 21% in the fourth quarter, but on the full year basis in year 2018, we have seen sales of 25.3 billion Thai baht, which is down by only 2%. Clear the weakness has actually coming from the Middle East market and Japan market. In terms of the total overall, like what Jörg has been mentioned earlier, during the fourth quarter has been a strong quarter for us. We have report a record quarterly sales of 36 billion Thai baht with the respectable margin, gross profit margin of 14.9%. And for that, I would pass the stage back to Jörg to discuss the prospect of year 2019 and what to look for.
Okay, thanks, Conves. Thanks, Ludo. Quick jump into guidance for 2019. As usual, we share this in February with a Q4 announcement. Sales growth, we believe, after 2 years of flat development, we're still on the same revenue level as 2016. We believe a moderate growth of 5% is something that is very doable. This is fueled by an overproportional growth in our pet care business. We plan to achieve here something close to 10%. We see very strong growth in frozen, in our frozen business in the US, but also here in Thailand, from expansion of capacity from new product lines. We see strong sales contribution continuously from the Thai market. We have Thamachart lined up to add here top line. We have good post-merger acquisition discussions with them. We see a good contribution from exports into Russia from our new acquisition in Russia, and our Chinese business continues to be gangbuster and add here top line. So 5% year-over-year growth we feel is well achievable. The European business is in a very strong position. Risks, let's also be very clear on this, are coming from the European currencies, FX. The euro has weakened compared to the Thai baht, so that's putting pressure. And we all do not know what happens in 5 weeks in London. We just don't know that. I guess everyone is kind of hoping that politicians will then eventually do the right thing. But we are prepared operationally that we can continue to deliver. We've overstocked, so we have a good risk mitigation plan. However, if we have here chaotic currency situations, this is something we need to then manage short term. So 5% year-over-year growth is something we feel is achievable. A gross profit margin of 15% is something we feel is doable. We had some one-time effects as discussed. There were some inventory write-offs. There was some pressure. There was a horrible Q1 We don't plan to go through something similar in 2019. And if we normalize these effects, we think 15% is achievable. Q4, we're at 14.9. So it seems we could have here a trajectory that leads us into something that's plus minus 15%. SG&A continues to be in the range of 10%. We will keep the pressure on SG&A performance. And we need to bring this into a 10% range. We are now a little bit above 10.5. But if we eliminate here a couple of topics, then we can continue to drive this down to 10. No material change on interest rate environment. We don't expect interest rates to change materially. We'll do a couple of refinancings of bonds that will be due. We don't expect there to be a substantial impact. CapEx, we'll have an operational CapEx of 4.3 billion. 4.3 billion operationally, plus a specific investment in Indonesia in the context of our feed mill activities. You have read that we are considering to IPO our feed business in Thailand, and we will support this with strong growth opportunities in Indonesia. We're setting up a shop in Indonesia, and if this comes, that would then add another 500 million baht roughly to an operational 4.3. But then we're not quite clear, does this happen before the IPO, after the IPO, so we need to see how this works. Dividend policy stays. We will have at least a 50% dividend payout ratio, and as usual, we want to pay more than in the year before. So this is the guidance for 2019. With that, I think we are already at the Q&A.
And thank you, everyone. And that sum up the presentation for the year 2018 quarterly result presentation. We open the floor for the Q&A right now. We actually got a number of questions already coming in which we will tackle them one by one. But feel free, if you have any inquiry, please type in your question and click send. Okay, we'll go to the first question first, which is on the tuna topic.
Yeah, tuna margin. Why did the tuna margin drop despite tuna raw material price weakness? I think if you look into the segment report, the key impact here comes from our branded business. We did have actually the private label business is quite flat. We've achieved 16% gross margin on the private label. I mean, that's not too bad. I think that's actually pretty good. So we are stable on the private label. We've dropped a little bit on branded, and this has mainly two effects. We had some inventory write-offs at year end, where we've implemented a new inventory policy, and under this new inventory policy, we are more prudent, we're more careful on our balance sheet, and secondly, we had very specific price pressure risks in the United States. We see a tremendous increase in costing pressure to the market in our chicken of the sea business in the US. This business is clearly challenged. It seems that many customers are using the antitrust legal situation to put pressure on the suppliers in the market. We feel there's really a lot of cost pressure coming, and that those two effects have led to a softening of the gross margin in our branded business.
We have a next question, which is related to accounting and employee compensation. So the question is, do we need to book an additional employee compensation according to the new labor law, moving from 300 to 400 days? When and how much will it be booked? So indeed, there was a new law which was issued in Thailand in December, where the additional employee compensation will indeed increase from 300 to 400 days. So what I understand is we are still pending from the signature of this new law. This is expected to happen quite soon in Q1 19. So yes, we think it is highly probable that we will need to record an accrual for this one. We are still in the process of calculating the impact, so we cannot communicate at this stage any amount. But yes, there should be an impact in Q1 19 or Q2 19, depending on when is the law signed.
Red Lobster, I commented on Red Lobster. Has the performance increased in Q4? Yes, it has. Guest counts appear to improve. Off-premise business appears to improve. We do see an operational recovery. We will have around 15, 18 million US dollars higher EBITDA than the year before. I think that's good news. The company is back on track to move even beyond that in the next year's budget. So we feel Red Lobster's performance is not out of the woods. I don't think we're out of the woods. We need a lot of more work to get really into the sunshine. But I think the situation looks a little bit better than it did a year ago.
We have one question regarding hedge accounting, and will hedge accounting be adopted in 2019? Yes, I think we already communicated on this one in the previous quarters. This is our plan. We plan to early adopt hedge accounting in Q1 2019. We really believe this change will really help us to explain to you the financial performance. You know that until now, according to Thai GAAP, we were reporting the impact of the hedging below the operating profit in a specific line, which is FX gain and loss, which sometimes make it quite difficult to explain to you the performance. And at least starting Q1 2019, the impact of the hedging related to the operations will be reported in the underlying line, so either sales or COGS, depending on the underlying hedge items. Yes, this is our plan for Q1 2019, and I think we will be one of the first company in Thailand to early adopt hedge accounting. Of course, it will bring a bit of confusion maybe and a bit of disruption. So we have some plan to explain to you and to do a bit of education on this one to explain to you the impact in 2019.
Quick two topics. TMAC is a shrimp hatchery that we have owned together with Mitsubishi for a long, long time. This is not a change of strategy. This is just consolidate our activities into our full ownership, into our full supply chain under the shrimp hatchery. This helps us to prove sustainability, to prove traceability, to show that we do control all major capabilities in the shrimp supply chain. So TMAC is really adding a lot of technical and process knowledge for Thai Union, and this will be a very good continued contribution to our business. The business is very small. It was a little bit loss-making in the past. We see good performance improvement in 19. This is going to be break even, but we should not expect huge profit contributions from this very, very small acquisition. TFM IPO, so TFM means Thai Union Feed Mill. Yes, we do consider an IPO of TFM. We have asked the board for approval to prepare plans to work with financial advisors to prepare this. And when the time is right, we will share with you the timeline, the offer details, and what the financial impact on Thai Union is. Thai Union Feed Mill is a fantastic feed business, great profit contributions. We do plan to continue as a majority shareholder in this business, even after the IPO. But we do feel this is a good way to create wealth for Thai Union, open a future growth path for the business. And when the time is right, we will share with you a little bit more details. I don't want to talk too much about it because this is also quite sensitive to the business. We want to have a solid plan that creates value for our shareholders, but also TFM shareholders.
Next question is related to the dividend payout ratio for 2019. So as explained in slide 14, we have a payout ratio which is just below 60% for 2018. You know that we have a financial covenants which make us mandatory for us to be below 60%. Of course, we have in 2018 from our net income an impact coming from the accrual on the COSI antitrust, as Jörg explained in Q2 18. So we decided to increase this payout ratio to the maximum that we could do, just below the 60% at 58.8%, and you have all the details in the slides 14.
A quick comment on bond increase. There's a question, why do we increase our bond limits? We felt with 40 billion bond bracket, we are slowly, with the growing Thai union business that we see globally, the 40 billion becomes slowly a restriction to our operating performance. There are no plans for any large deals or transactions. We do not plan any large M&A. We do not plan any large expenditures. We do this in order to keep more flexibility for us in our operational financing of the business. We are now substantially growing over the next years. We do see that we need the headroom on funding, and we don't always want to grapple around whether we hit the 40 billion or just below. So we just give us a headroom to 50. There is no background on any M&A related activity.
We have another question regarding the restated financial performance for Q1 17 to Q4 18, mainly due to the ESCO reclassification. So you will find this one in slide 55 of the presentation, and you know that starting Q3, we restated and we reclassified ESCO in discontinued operations, so you don't have any items related to ESCO on the operating results, and everything of ESCO is now presented in discontinued operations. If you remember, we were using these slides since 2 years already with the fleet, which was sold last year also on this one. So you have here consistent presentation for 2017 and 2018 with ESCO and TTV being presented in discontinued operations. The impact of TTV is getting smaller and smaller and is almost non-significant for 2018.
Guidance will drive growth in 2019, 5%. I think I commented on it. Pet care is one, frozen US, frozen shrimp business in Thailand. We see strong growth. Lobster in Canada, we see good growth momentum. China, as I mentioned, our supply with Thamachat Seafood, with our Russian joint venture. So I think there are a couple of solid growth pockets to substantiate the 5%. Guidance on gross margin. If you look at the 15%, that's basically where we had been over the second half year in 2018, and we continue to perform we plan to continue to perform on these levels. How to get SG&A down to 10%? Look, we've been able to keep SG&A flat now for quite some time, and we will continue to keep SG&A flat. At least that is our intention. We will continue to stay moderate on our marketing expenses. We will relook into our headquarter cost, and we have the one or the other plan to really substantially take out costs by moving to shared services, by being more productive from our SAP programs. Are we going to hit 10.0? I would wish we can. And I think we will try very hard to do that. Will it end up at 10.2? Well, I think then it's still a quite good success. So key answer here is stay absolutely on the brakes with SG&A, continue our 5% growth, and we will automatically move much closer to the 10% than we are now.
Next question is related to the TMAC impairment, and when was the 87 million baht amount recorded? So this amount was recorded in the profit sharing from associate in the line just be above the EBIT.
Okay. Yeah, the accounting Red Lobster on the tax. Look, if you take Q3 and Q4 together, I think that's the right number. The negative effect Q4 is just correcting the positive effect in Q3. I think we've overestimated here the tax schemes that we had in Q3, and we had to normalize this in Q4. So I think if you take the second half together, you're in a much more reasonable situation. So it's nothing that has to do anything with Q4.
Okay. All right, and as there is no further question, this is conclude the live webcast session for year 2018 Thai Union Group performance presentation. Thank you very much for your attendance, Mr. York Ari, Mr. Ludo, and our special guest, Kun Stefan, and of course, all of you guests who participate tonight. Thank you very much for your time, and should you have any further inquiry, please don't hesitate to contact IR anytime during office hours. สวัสดีครับ
Have a great evening and a good day to the United States.
Thanks a lot. Goodbye, everyone. Goodbye.